Hi, my name is Julian Koma from Market Update Premium. We trade growth and momentum stocks. So today I want to speak about the fast moving stocks in the market, momentum stocks. But what are momentum stocks? How to screen for them, how to buy them, and how to sell them. I will give you all these insights in this video. So stay in the video to really get some knowledge about momentum stocks. What are momentum stocks? So a momentum stock is a stock that moves very fast. It accelerates in price, and what you want to look for is that it continues with a momentum. And I want to show you two examples. So the first one is MicroStrategy. We traded that very successfully here in October, November last year. And what you can see here is that the stock is already up 50, 60 or even 100% before it really takes off. So you can see that the stock moved higher here within the base, but the real acceleration happened after that. And this is what you want to look for when you want to identify a momentum stock. You want to make sure that the stock shows a high momentum, a high acceleration. You don't want to trade all this boring stuff, these slow movers like insurance stocks, like bank stocks, and so on and so on. You want to find really good stocks. They are usually coming from technology. They are usually coming from a background with new innovative products. Like in case of MicroStrategy, of course, it's Bitcoin and cryptocurrencies, but the story really counts for momentum stocks. And you want to make sure that they had a big move of 50, 70, 100% before you get interested in the stock. So in case of MicroStrategy, the stock was up, what was it here, 50% before I took the first buy. Then I got shaken out a little bit here, and then I bought the stock back when it was up 70%. And then you can see after I bought the stock, this thing took off and rallied for another 167%. So, and I want to show you a second one, and that's Big Bear AI. I also made a video about that in my YouTube channel, so have a look at that. And here is another very typical momentum mover. You know, let's have a look at the momentum here. So the stock was up 224% before I entered it, and then it built this very nice volatility contraction pattern. But you know, it showed a lot of momentum before, and then I entered it here on the breakout, and let's see how far this thing moved. It moved 100% in just a couple of days after I bought that. So this is what you want to make sure. You want to have a stock that it moved fast, and then after you bought it, it continues with the same momentum. How to screen for momentum stocks. So I personally use Finviz if I want to screen for momentum stocks. I have a lot of videos about screening and Finviz in my YouTube channel, so you can have a look at it. But when I look for momentum stocks, I'm always looking for one criteria, and this is the 52-week high and low, because you want to find stocks that have a very fast moves off the bottom. And very often you have stocks that moved 100%, 200%, or even 300% from the 52-week low. This is why it's my main criteria when I look for momentum stocks. But let's go through the settings very quickly. So market cap is important. You can define it for yourself if you want to trade micro cap stocks, or if you want to trade small caps, or if you want to trade mid caps. I personally use mostly the small caps, so I want to have at least 300 million of market cap when I look for momentum stocks. Then of course I want to look at only stocks, not ETFs. If you want to include ETFs into the screening, you can change that here to any, but I use the stocks only criteria here. Then I want to make sure that the stock is above the SMA 50, the simple moving average 50. Then I want to make sure that the stock is really on the move, and in my experience 70% is enough. If you want to go extreme, you can also use 100. If you want to catch some movers that are not moving so fast, you can use 50 as a criteria, but in my experience 70 works the best. Then price. What is an ideal price for a momentum stock? I personally use $3. Of course, these are very cheap stocks, but a lot of big moves happen in stocks, in small cap stocks that are above $3. So that's why I choose $3 if you want to trade stocks with $2 or $10. You can change that here. And average volume is important because you don't want to trade all these small micro cap stocks that only trade 10,000 shares or 20,000 shares a day. Why? Very simple. If somebody comes in with a bigger order into the market, say somebody wants to distribute 100,000 shares, these stocks can drop very fast. That's one of the reasons why I'm looking for liquidity. And liquidity starts for me at least with 500,000 shares, better 1 million shares on average per day. That's why I have this 500,000 threshold for momentum stocks. And then you can see here a lot of stocks come up. A lot of familiar names that we are also trading in the community, like ASTS as an example, or we are observing the quantum computing stocks at the moment. And you can see that they are all meeting the criteria of a momentum stock or momentum trade. So stocks that really are on the move. And what you want to do in this screener is you want to look for consolidations. You want to look for consolidations where the price is getting really tight. So just to give you one or two examples, WGS is one of these stocks going sideways for a couple of days. Gorilla Technology Group is getting tighter a little bit here. Qubit or quantum computing is a stock that is getting tight for 2 weeks here. So this is what you want to look at. And then you want to go into the daily chart in TradingView and look for potential entries. So, and I'm usually going through these pages to identify some good winners, but you know, very clear, the best ones are the strongest stocks, and you will find them on the first, let's say 2 or 3 pages. There you will find the biggest momentum stocks. How to buy momentum stocks. It's really not complicated. You know, I'm teaching this stuff over and over again in my video course. I taught that to so many members in my community. And you know, a lot of people always have problems with the entry, but the entry is not complicated if you have a very good setup. And I want to show you that here. So Alibaba showed a very high momentum here in the first couple of weeks. It moved 30% in just a couple of days. For a stock like Alibaba, this is definitely a big move, right? It's not the strongest momentum mover, but I want to use this example because it has this very, very nice consolidation here. And where do you want to enter? You want to enter as soon as the stock moves above this breakout line from this pattern. Then you buy a first position, and you can do that with a simple stop order, and then you get stopped in. And for the most stocks, it's absolutely okay to place a tight stop loss of say 7%, and maybe for some story stocks you want to use a 10% stop loss. But that's enough, right? So in the case of Alibaba, you can easily place, let's say, a 2% stop loss or a 3% stop loss, and then you have the benefit of a very, very high risk-reward ratio. So usually I'm trading 10 to 15% position sizes. That is what suits to me. Of course, you can also use higher position sizes, but then you have a bigger risk on the downside. That's always something you want to keep in your mind. And keep in your mind, right? Momentum stocks are moving very fast. They can also move very fast to the downside. That's why you want to be very good at risk management. And it's also one of the reasons why I put risk management in the first chapter of my video course, because I see so many people are not aware how to manage risk in the right way. Let's have a look at another example, DXYZ, Destiny Tech 100, because it shows a little bit a different setup here. So in that case, you have a volatility contraction over a couple of days. What is a volatility contraction? Very simple, and it's not about the VCP pattern. Volatility contractions can happen in many different ways, but the key principle is that the up and down moves are getting smaller and smaller and smaller. You can see that here. So the stock moves higher above the EMA 8 for a couple of days here, and it's really getting tight. So the daily trading ranges are getting tighter and tighter and tighter. And then when the stock is coming out of this pattern, so when the stock breaks out above, say, 45, 49 in that case, you want to take a position. Then it's out of the pattern, and then you can assume that the stock accelerates again on the upside and continues with the same momentum. And then you can see that here you can place a 7% stop loss. That's enough. If you want to have a little bit more distance, you can also take a 10% stop loss. But I'm usually trading with a tighter stop loss so that I have a higher risk-reward ratio. There are many different setups and many different ways how to enter a momentum stock. But let me say one thing that's important. You don't want to wait for anything if you buy into a momentum stock. You want to buy the stock as soon as it breaks out of the pattern. You don't want to wait a half hour, or you don't want to wait for a specific volume. A big volume is definitely a plus, and I'm sometimes waiting for that, but only in very weak market situations. No, you want to execute your trade as soon as your buy price is reached. That's important. Otherwise, you will get into the trade too late and then you will get stopped out. So be very precise at execution. That's key. How to sell momentum stocks. So selling is always the most trickiest part in trading, and I know that so many people have problems with that, especially to sell into the strength or, following some rules. But very, very important, you need rules for trading and you need rules for selling right. And you will maybe never ever catch the exact high of a stock, or you will never, you will never have a perfect sell. And to be honest, in trading, it's not about perfection. The market is not perfect. Why should you be perfect? If you strive for perfection, you will have a lot of problems in this game, especially with selling. So I'm usually, I'm using a lot of sell rules. I have a lot of sell rules, and I share them also with my members, because it's important to apply the right sell rule in the right situation. And when you have a stock like Big Bear AI here, and it's really going vertical, it really explodes here on the upside, you want to take the most of your profits into the strength. In this example, I took 100% of the profits into the strength, but it was a little bit a tricky case because the stock was up big in pre-market, and that was a selling sign for me. So this looks like a climax top. What is a climax top? You have a stock that it's up for a couple of months, and then it breaks out of a pattern and really accelerates on the upside. Be careful with that, because not every acceleration on the upside is a climax top. But in that case, in Big Bear AI, for me, it was a climax top situation, and I sold 100% here, or the rest of my position, into the strength. I took some profits here off the table, but that was more for managing risk accordingly, because the stock made a big move in one day, and when now the stock would fall back on the next day, I would lose a lot of open profits. That's the reason why I sold 25% into the strength, and then I took the rest of my position here around the highs. So this is more a climax top selling tactic. The second one, and I want to show you that with the example of MicroStrategy again. The second one is about using a moving average, and there are thousands of examples you can use. I personally also sold a lot of MicroStrategy into the strength here, but when you look at the moving averages here, the EMA 8, the EMA 21, and the EMA 65, you can see that over time a stock develops a behavior, how it reacts to a moving average. And I always call that, what is the dominant moving average? What is the moving average where the stock reacts to? That's important. And it's not about perfection, right? It really doesn't matter if you use the EMA 8 or EMA 10 or SMA 10 or whatever. It really doesn't matter. It's much more important that you are 100% consistent with your rules and that you believe in the trading rules and into the sell rule. So I use the EMA 8 and EMA 21, and mostly for momentum stocks I use the EMA 8. And you can see that here perfectly how MicroStrategy reacted to the purple line, which is the EMA 8. After that, you had one shakeout or one retest of the EMA 21, and then it continued with the same behavior. It always pulled back to the EMA 8 here. And this is something you can use for your own trading. So when there is not a climax top in a momentum stock, you can say, okay, I use the EMA 8 as my trading stop. And you don't want to use the EMA 8 as your trading stop and just, place your stop loss exactly at the EMA 8. No, what you want to do is you want to look at how the stock reacts on the EMA 8. That is important. So, and when you see here, for example, that the stock reacted to the EMA 8, then you can put your stop loss below. And it's the same thing here, right? So you want to place your stop loss here, you want to place your stop loss here. And there is another rule that you can also use for the moving averages. You can sell the stock for the first time when it closed below the EMA 8 in that case. So you can see how often it reacted to the EMA 8, but then it closed below. And now you maybe say, yeah, but 1 day later or 2 days later, the stock set up again and exploded on the upside. Yeah, welcome to the reality of trading. So it's not about perfection, right? It's not about perfection. What you want to learn in that case is you want to sell here and you want to buy back here. That's what you want to learn, because if the stock closed below the EMA 8, and you can see that here, it's maybe not setting up again. It's going sideways and then it's rolling over. And that's what you want to avoid, right? And over time, you will get more and more experience with that. And then you can make decisions a little bit better and also a little bit on discretion, because you can see that here it held perfect the EMA 8 and then it accelerated and then it became more like a climax top. And this is what you want to notice, and that's the reason why I sold the remaining position here into the strands. And I was also not catching exactly the high, but I was able to catch the most of the profits before it tanked. So these two rules, right? Climax top rules and also the rule about the moving averages, they will help you a lot to sell at the right point in momentum stocks. Now you got a first introduction into momentum stocks. If you want to gain more knowledge, go to my website and sign up for the 14-day free trial of the Market Update Premium community. You will join a lot of passionate growth and momentum traders. On my website, you will find also the link to the video course if you really want to make a deep dive into growth and momentum trading. Don't forget to subscribe to my YouTube channel here or follow me on Twitter.